Federal government makes plans for post-COVID-19 Nigeria. 338.94 billion naira generated as VAT in the first quarter of 2020. Circulation of currency rises by 11.38 billion naira in 1 month, plus federal government to make LPG cooking gas more affordable across the country. The program is Business Express on the network service of the Nigerian Television Authority, the NTA, and we're reaching you from Abuja, the nation's capital. I am Muplang Dakok. So good to know you're still with us on Business Express. Indications are that more public assets will be up for sale by the federal government as the Bureau of Public Enterprises reviews the 2020 privatization work plan. Minister of Finance, Budget and National Planning Zainab Ahmed says the federal government intends to finance the deficit through domestic and foreign borrowing, as well as proceeds from privatization of public assets. The review of the work plan was informed by the drop in the projected revenue that will accrue to the federal government within the year. Data from the first quarter of 2020 shows that 338.9 billion naira was generated as VAT as against 308.48 billion naira generated in the fourth quarter of 2019 and 293.04 billion naira generated in the first quarter of 2019, showing that VAT has increased by 9.87% quarter-on-quarter and 15.66% year-on-year. Professional services generated the highest amount of VAT and was closely followed by manufacturing, commercial and trading, while mining generated the least and closely followed by textile and garment industry and local government councils. Out of the total amount generated in the first quarter of 2020, 172.6 billion naira was generated as non-import VAT locally, while 93.67 billion naira was generated as non-import VAT for foreign. Total currency in circulation in the country rose to 2.3 trillion naira at the end of April 2020 from 2.29 trillion naira on March 31st, 2020. Latest statistics from the Central Bank of Nigeria indicates a rise of about 11.38 billion naira in the period under review. The currency in circulation had earlier dropped by 61 billion naira from 2.24 trillion naira as at the end of January 2020 to 2.18 trillion naira at the end of February 2020. And still talking currency, dollar eased from a 3-week high on Friday, but looked set for a modest weekly gain as worries about a second wave of coronavirus infections rattled investors. Meanwhile, the federal government says it will finance the 5.36 trillion naira budget deficit through domestic foreign loans and proceeds from privatizations. Minister of Finance Zainab Ahmed, who stated this, noted that the Federal Executive Council also approved a revised budget of 10.52 trillion naira at the meeting against the 10.59 trillion naira approved earlier. She added that expenditures related to COVID-19, which was not included in the budget, has been added to it.
Previously not budgeted to enable us adequately respond to the COVID-19 pandemic. The federal government from this budget will have a direct revenue for funding the budget of 5.158 billion. The deficit to this budget is 5.365 trillion naira, and this will be financed by both domestic as well as foreign borrowing. The foreign borrowing we're doing for 2020 are all concessionary loans from the IMF, which has already progressed and has approved and has crystallized, from the World Bank, from the Islamic Development Bank, as well as from Afrexim Bank.
To shed more light on the approved revised budget of 10.52 trillion naira is an economist and a lecturer at the University of Jos, Dr. Solomon Gushibet. He will be speaking with us via telephone. Hello, Mr. Gushibet.
Hello, Mupula.
Okay, good day.
Good evening. Thank you for having me.
All right.
Good evening.
So what do you make of the revision of the budget at this time, and how do you see the assumptions in the revised budget given the present realities?
Thank you. Let me start by saying that it is not easy for those at the helm of affairs at a time like this in our journey as a nation. We are indeed in a trying time. COVID-19 presents tough times not only for Nigeria but the entire world economy. Both strong and weak economies are crumbling and looking for solutions. So Nigeria is not an exception.
Okay.
The year 2020 budget is revised to meet the current economic challenges. This, okay, I believe, is the right step in the right direction.
Okay. Do you think that the new $25 per barrel benchmark for oil is a good one? Do you think it's realistic?
Yeah, it's realistic because if you look at the swing in oil pricing, it's slightly between 20 and $30 per barrel. And if the government can pick it at $25 per barrel, I think is the right step in the right direction. Let me give you a little analysis.
Okay.
You know, government projected that GDP is expected to contract by, I think, about 3.5% in 2020. Then oil earnings is projected to decline by 90%, and that oil price is expected to fall. And government decided to peg it at $25 per barrel against the initial benchmark of $57 per barrel as contained in the Appropriation Act of 2020. Crude oil production was, supposed to be 2.18 million barrels per day, but it was revised downwards to 1.94 million barrels per day. And the total revenue that government estimated from oil and gas, for fat distribution used to be 5.5 trillion, now has been revised to a paltry 1.1 trillion which is 80% lower. And then customs revenue and value-added tax, they are all projected to decline as a result of COVID-19 impact on the economy. So, and I think that government is also planning to finance a budget deficit of 5.3 trillion.
Okay. Mr. Guchibet, let me come in here. What areas do you think more attention should be given to in order to achieve a vibrant fiscal year and also to effectively fight COVID-19?
The area areas that requires much attention. I think I will give you three areas.
Okay, quickly.
First, government should ensure cost savings and reduce the cost of governance. And there is need to quickly implement the Oronsaye report and involve the labor union in the implementation process so that there will be less resistance.
Okay.
And I believe that government can boost outcomes by improving the pace and quality of service delivery without delay.
Okay.
So I'm advocating that government should be proactive in implementation of the budget as revised.
Okay.
And the second area is that government should reprioritize budget spending and give priority to at least four key areas.
Okay.
On agriculture and rural infrastructures.
Okay.
Growth enhancing expenditures should be the guiding principle now.
Okay.
Reducing expenditures on COVID-19 and expenditures on health. I think these are five areas that government should give attention. And then another area that requires government attention, a significant part of the budget, the initial budget was 10.59 trillion, and in the revised budget is 10.52 trillion,
yes.
A difference of 71.5 trillion. If you look at it, the government said that they reduced the budget and then added new expenditures that were not in the Appropriation Act in order to cover for COVID-19 response. So I'm advising that government should, ensure that the palliatives are transparently and accountably distributed.
All right. Thank you. Thank you very much, Mr. Gucci-Bet. That's, we will come to you some other time to discuss more on other topics. Thank you very much for your time.
You're welcome. Thank you.
Survival is the key word on the minds of billions of people around the world hit by the impact of the coronavirus pandemic. No country in Africa is spared, and businesses have continued to metamorphose in reaction to the realities on ground. Let's join Lia Katumba Batunde on surviving COVID-19.
As the coronavirus pandemic continues to batter economies around the world, owners of businesses have also been looking into ways of surviving this harsh attack on their businesses. Mohamed Gunat is one of such industrious Nigerians, blending tomatoes and pepper into ready-made paste for cooking. 2 years into the business, coronavirus struck.
It has not been easy for some time because of the COVID-19, because before then, people went to the market to buy the fresh tomatoes, and when you ask them, they say they have loaded tomatoes in their freezers. So I've not been finding it easy.
She describes it as an enterprise still at its teething stage.
For now, I buy the raw materials in the market, but I'm working towards having my farm. And once I buy the raw materials, I grind it, and after grinding, I boil. When I boil, I bottle it.
2 challenges are before her: closed interstate borders and a tough decision to let her 2 employees off.
Because once I put on my advert on social media, people contact me through my number. And once they give me their address, I deliver to their houses. Because of the lockdown, some people would tell you they don't want you to come to their houses and they don't want to go out. And so compared to my sales before the COVID-19, I think I was doing better.
The coming days, she says, will determine the fate of micro, small and medium businesses, but till then, the mobile phone remains the link between producers like Mohamed and the shrinking market space.
The federal government has outlined its plans to move the country forward after it exists the present COVID-19 pandemic, highlighting actions in the areas of the economy, healthcare, jobs creation, among others. A statement issued by Special Advisor to the President on Media and Publicity, Femi Adesina, noted global anxiety on what the future holds for humanity post-COVID-19, particularly in the respect of the economy, healthcare, job, security, and general well-being, while noting that federal government has taken and will further ensure improved living standards. Femi Adesina added that plans are afoot to tackle wealth systems and infrastructure. The equities held steady midday at the Nigerian Stock Exchange this Friday. It closed positive, but a positive of 0.00%. The all-share index closed at 23,871.33 basis points. Investors exchanged 221 million shares valued at 2.4 billion naira in 4,330 deals, while market capitalization closed at 12.4 trillion naira. To talk about the effort of the Nigerian Stock Exchange in supporting the fight against COVID-19 is our guest from Lagos. His name is Jude Chiemeka. He's joining us via Skype. Hello, Mr. Chiemeka.
Hi. Thank you for having us.
All right. So, can you give us an overview of the performance on the Nigerian stock market in the course of this week, and also tell us what to expect next week?
All right, thank you. Like you pointed out earlier, the market did trade flat this week, coming from a very strong rally the week before. We did see a bit of profit taking across the board. But then it presents very good buying opportunity for investors who are looking for long-term capital gains. A lot of buying activity we saw in sectors like the banking sector, as well as the agricultural sector. But we think that the market will continue to hold steady. And then going into next week, we expect more buying activities, even as the investors begin to look at fundamentally strong companies to see how they can take advantage of the low price of these securities at this particular time to rebalance their portfolios.
Okay, in line with corporate efforts to support the fight against COVID-19, the Nigerian Stock Exchange has made commendable efforts in the past few weeks. And it has also lent its voice to the promotion of social distancing. What other initiatives is the NSE doing to support the federal government?
Thank you. Just as was recently announced by the CEO of the Nigerian Stock Exchange, Mr. Oscar Oyemaowen, the Nigerian Stock Exchange is committing 100 million naira towards the fight for COVID. 60 million naira will be committed to the Capital Market Support Committee for COVID-19, an initiative of the Securities and Exchange Commission galvanizing the capital market ecosystem to raise R1 billion towards this particular. The stock exchange in itself will commit 40 million naira to the Mask for All initiative that the exchange is working on. I mean, the whole idea is to try and provide 400 million masks for Nigerians. These are washable, reusable masks that have met the NAFDAC standard as well as the Standard Organization of Nigeria standards. And the whole idea is to help flatten the curve, especially for rural communities that are very vulnerable. We're also strong in the area of campaign to provide education around what needs to be done. Like you know, this is a health crisis. And in the health crisis, three things come to play. One is even identifying who has what, based on the testing that the federal government is doing. And the second one is around isolation and treatment. And the third one, which is very critical, is around information dissemination. So how do people prevent themselves or keep themselves safe from this virus? And that's where we're very strong in providing the right information for people to try and maintain social distancing. But beyond the social distancing, also know where to call, who to call, should they have issues around this particular pandemic.
All right. You agree with me, Mr. Chiemeka, that there are different asset classes of investors on the Nigerian Stock Exchange. So with all this, you're coming into the market with all the investments, what do you see happening to opportunities? Do you think there will be equal opportunities for all the players?
Thank you very much. I think I'll look at that question from two perspectives. From the issuer's perspective, clearly, from the equity side, there have been a lot of, so I say, fall in value of equities. Stocks are trading fundamentally low at this particular time. So we think post-COVID, there will be a lot of issuances around fixed income. I say fixed income because clearly a lot of the corporates would need to raise capital to be able to mitigate against the effect of this pandemic. And then a lot of investors themselves in the last 3 years have been focusing more on fixed income securities. Like you know, the Nigerian Stock Exchange is a multi-asset stock exchange. So we are working to improve visibility around our fixed income play. And we think a lot of the investors will be focusing on fixed income instruments. Largely because you can see the fall in rates, especially around the treasury bill. So fixed income instruments around federal government savings bonds, FGM bonds offer decent yields for investors at this particular time. So we think that a lot of investors are focusing on that. Around diversification of portfolios, we'll probably see investment in alternative assets. Nigerian Stock Exchange has exchange traded products that are listed, and the exchange traded products around the ETFs. We do have instruments that will help clients mitigate against portfolio diversification. So our ETF, New Gold, returned 32% last year, and year to date it has returned close to 38%, even though the market in general is down about 11%. So there's cherry picking, and it's all because of investors relying on the information that we put out there to be able to take advantage of where the opportunities are.
All right, Mr. Chiemeka, I will take the last question, please, very quickly. Can you tell us what you foresee in terms of investment on the Nigerian Stock Exchange post-COVID-19?
Post-COVID-19, definitely we'll see the Nigerian Stock Exchange leveraging on technology around digital transformation to help businesses. Like you know, we put out guidance around how businesses can take advantage of virtual meetings to be able to meet obligations to their clients. So we are heavily skewed towards the fourth industrial revolution. I think this whole COVID event brings that into force. So we'll be leveraging our technology to create new products. One of the pillars the exchange thrives on is innovation, and we'll continue to innovate and engage the community. We're partnering with international organizations to ensure that we deepen the knowledge base in our market, and we'll continue to ensure that we offer investor education across different segments of the market, particularly around deepening domestic participation in our market to ensure that we do not fall again when the market, when international investors begin to pull out their investment around foreign exchange concerns. So that is basically where we are going to be focusing on post-COVID-19.
All right, thank you very much, Mr. Jude Chiemeka, for your time with us on Business Express today.
Thank you so much for inviting us.
All right. Stocks in Asia traded little change Friday ahead of the release of Chinese economic data. Bosede Ebel has details of market activity.
European markets advanced on Friday, 15th May, as investors pinned their hopes on economic reopening efforts and a host of key first quarter data. DAX rose 1.84%, FTSE 1.53% and CAC 40 1.09%. Stocks in Asia were little changed as data showed China's industrial output bouncing back more than expected in April. Shanghai Composite slightly lower at 2,868.46. Hang Seng Index hovered around the flat line as of its final hour of trading, while Nikkei closed higher at 20,037.47. U.S. stock futures edged higher in early Friday trading following a sharp rally during the regular session on Thursday as investors awaited several key data sets. Dow Jones Industrial Average futures added 74 points, implying a Friday opening gain of around 377 points. S&P 500 and Nasdaq futures also pointed to a marginally higher open for the two indices. Africa's bourses were mostly in green, with Tunisia's Tunidex, Namibia's overall index, and South Africa's JSE Africa Top 40 posting gains.
And this is where we end this episode of the program. Don't forget you can access all previous episodes on YouTube, and you can communicate with us on Twitter. The handle is @NTA News Now. The hashtags is BizX. We value your feedback, so join us again on Monday for another package. As we continue to fight COVID-19, remember to keep social distance and always wash your hands with soap under running water. I am Muplang Dakok.